Visa and Mastercard are two of the most profitable businesses in the world. They're also two of the most recognizable brands in the world. Visa alone has over 4 billion cards outstanding in people's wallets and phones worldwide. But which one is the better stock to buy? That's the question I'm going to answer in this video, comparing these two financial services companies on revenue, profit margin, cash flow, and valuation to determine which one I think is the better investment for long-term investors.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
Visa and Mastercard have demonstrated excellent revenue growth over the last decade. Visa has increased to $36 billion in annual revenue from a little more than $14 billion in 2015, while Mastercard has jumped to $27 billion in annual revenue, up from $10 billion in 2015. Visa and Mastercard generate a fee from every transaction that happens using one of the cards in its network and a small price percentage of the transaction. So while businesses and merchants might complain that Visa and Mastercard don't compete with each other aggressively enough to lower prices for merchants, they do generate excellent revenue and profitability, which is great news for investors. Now, inflation has also helped Visa and Mastercard because, as I noted, they get a percentage of the revenue on all the transactions using the card in its network. And so if inflation goes up and you're spending more for your regular purchases, that means Visa and Mastercard, their 3% or 3.5% on every transaction is increasing because you're spending more dollars nominally. So these two have protected investors to some degree from rising inflation. And if you're concerned about inflation over the longer term, Visa and Mastercard are excellent choices to consider. I mentioned in the introduction of the video that these are two of the most profitable companies in the world, and Visa is more so than Mastercard. You can see Visa's operating profit margin of 67%. It's the most profitable company out of any of the more than 110 companies that I follow, by far. Well, I shouldn't say by far because Nvidia is closing the gap quickly, eclipsing 60% operating profit margins. Mastercard is not that far behind either at 58% operating profit margin. And what's more impressive with these two is not only are their operating profit margins one of the or two of the highest of any company in the world, but they're improving. Right? Over the last decade, Visa's operating margin has increased from around 64% to 67%. You might say that's only a 3% improvement. That's not a big deal. Well, it is if you're already at 64. When you're already at 64%, industry forces are working aggressively to bring down your profit margin. Competition is working aggressively to try and get a share of this lucrative market and to be able to defend yourself against people that want to have some of this lucrative market and expand. That's truly impressive. And it's the same for Mastercard, jumping from 54% to 58%. Again, not only defending, but improving its profit margins. Cash flow from operations to sales is a similar story because these companies don't have inventory to manage. They don't have large cash flow expenses and outlays. And so their cash flow from operations are excellent as well. 55% for Visa, 52% for Mastercard. Again, Visa with a slight advantage here. Return on invested capital measures how good a company is at taking investor money and turning it into profitable services and products. In this measure, Mastercard has a significant advantage with a 53% and excellent return on invested capital against Visa with 33%, which is also a really good return on invested capital, but Mastercard is better in this regard. Now, this could be because now you notice that Mastercard's cash flow and profit margin are lower and its revenue is also lower than Visa, but its return on invested capital is higher. And you might say, how can that happen? It can happen when a company, even though they're generating lower profits, if they're using less capital to generate those profits, then they can have a better return on invested capital than a rival who has better margins and better cash flow and better revenue. And finally, I wanted to compare these two on valuation. And Visa is trading at a forward PE of 25, where Mastercard is trading at a forward PE of 32. Mastercard has better penetration internationally, has better growth prospects, and has the better return on invested capital, while Visa has the better profit margins and better cash flow from operations to sale and has larger scale already. Revenues are much larger than Mastercard, and it's already in over 4 billion. There's already over 4 billion Visa cards outstanding, which is more than what Mastercard has outstanding. So if I was to pick between these two excellent businesses, by the way, I have both of them rated as a buy. I would pick Visa as the better buy over Mastercard, but it's close. It's not like I feel Visa is so much better than Mastercard as a long-term investment. They're both great. In fact, I own both of them. I own some Visa stock and some Mastercard stock, and I think they're both excellent businesses. As I shared with you, remarkable metrics in terms of revenue, profit margins, cash flow, return on invested capital. The competition in the industry is working really well. And in fact, the competition is so favorable that they're getting regulatory concerns that they're not competing strongly enough, which is good news for investors if companies are not competing strongly against each other. And that's keeping prices higher and that's keeping profit margins higher. Of course, merchants, businesses would want these two to compete with each other and tell them, look, we'll give you a lower price if you switch to us and don't accept Visa or vice versa. But they're not doing that to each other. They're pretty much matching each other on prices and fees. And that's really infuriating merchants and businesses because they don't like to see that. They don't like to see big rivals working together. Well, not, you know, directly working together, but indirectly working together to keep fees elevated, to keep profits higher for themselves and not compete against each other, which are the type of industries I'm very attracted to. It's the opposite of like electric vehicle companies, right? They're in a price war all against each other, everyone lowering prices to try and gain market share, all while hurting profitability for the industry, everyone, right? That's not the case here. Visa and Mastercard just saying, here, these are our prices. We're not going to fight against each other to try and gain your business. I like both of them. If I had to pick only one, I would pick Visa. Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've created a book, I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.